It is said that the average millionaire has about 7 streams of income. The average usually has only one, usually from their job, which can put them in a financially balloon low position. Not all types of income are created equal. Some of those are active, some are passive, and some are a mix of both. Some are highly taxed, while some can be leveraged not to have any taxes at all. Today, we go over the 7 different types of income that the average millionaire has in their portfolio. If you like money videos, make sure to subscribe and hit that little bell button so you don't miss any of those videos. Now, let's get started. The first and most common source of income is earned income. This is what one gets from a job. This ranges from an average worker to a CEO. Many CEOs are still employees of a company. Other professionals, such as doctors, nurses, and freelancers, would also fall into this category. Earned income is when you trade time for money, which is what is called active income. The dangerous part is staying in this category because this type of income leverages your time, which you have a limited amount of. As you only have 24 hours a day, like everybody else, there is always a ceiling on how much money can be made within this category. It's also one of the highest tax forms of income. In this category, taxes can be as high as 40% of your income. Hence, some individuals in this category pay nearly half their earnings for the taxes, depending on their income. This is great as a starting point, but we must know what other types of income are out there. The second stream of income is profit income. This includes income produced as a result of selling products or services for more than it costs to make or purchase the product. This is where we go from employee to entrepreneur. Of course, much easier and cheaper nowadays with the help of the internet. Whether you sell a physical product or a digital one, if you sell a product for a higher price than it takes for you to make or buy it, you're making a profit income. This can be both active income or passive income, depending on your business model. If you create things yourself and sell them, then it's more of an active income. But if you create that sign of the product and you have a manufacturer creating the product for you, or if you make a digital product, it has the potential to become a passive form of income. These two types of profit incomes are taxed differently. If you're creating physical products on a small scale, you're going to be taxed the same as earned income. But if you build a business, you might be able to take advantage of many tax breaks by forming a company or a corporation. The third category of income is interest income. You make interest income from collecting interest on money lent. Now, I don't mean lending money to your friends. This is usually a bad idea, but there are a few ways of doing this to create this form of income. Lending money to banks in the form of a bank city, or to companies in some sort of bond, or to the government in the form of treasury bills. These are usually safer ways of investing your money, but definitely not the most lucrative. Many of those are between 1 and 4% return rates per year. This is a passive form of income because most often your active involvement isn't required. Number 4, dividend income. Dividend income is from investment in the stocks where the companies pay part of the profit to the shareholders. Once you buy the stocks of a company, you become its owner as a shareholder. If the company shows profits, they issue checks to their shareholders each quarter. So with companies paying dividends, you receive part of the profit that a company has made. With qualified dividends, you may pay a lower tax rate based on the type of dividend. If you earn less than $38,600 in ordinary income, you pay 0% on your dividend income, and it caps at 20% if you make over $425,000, which is much lower than the earned income, which can go up to a 40% tax rate. Number 5, rental income. The classic source for rental income is from buying real estate and then renting it out to other people. It doesn't necessarily have to be home rentals, but it can also include commercial properties, which are real estate that can be rented to businesses, or industrial real estate, which is rented to manufacturers. Rental income doesn't have to come specifically from real estate. There are other ways to develop rental income on a more minor scale. Many people rent their equipment to perform in various industries, or their cars or instruments, etc. Any income produced by lending a property to somebody else in exchange for money will be treated as rental income. Number 6, residual and royalty income. This is the type of income where you get paid even after your work is already done. Whether you worked in a movie that keeps up with views, wrote a book that continued to sell, or more recently you built some kind of YouTube channel that kept receiving views. Royalty income is a form of residual income. Royalty income is money earned from letting others use your creations like music or books for profit. Musicians earn royalties when their songs are streamed, sold, or reproduced, just as authors do when their books are printed and bought. Royalties continue as long as people buy or use their work. Multiple types of royalties can be collected on one property. For example, J.K. Rowling earns royalties not only on her books but also on movies and merchandise based on them, even 20 years after the first Harry Potter book was published. Number 7. Capital gains. This has been an asset that has been appreciated is sold. The most common ones are real estate and stocks, but there are many other assets. For example, if you bought a real estate property for $180,000 and you sold it for $250,000, you generated $70,000 in capital gains income. If you bought 100 shares of a company for $20 each and then sold them at $120 each, you realize a capital gain of $10,000. This is different from profit income because you're not buying or making a product and selling it for a profit. Here, you have assets that are appreciated in market value. You don't have much control over the value increase, but the great thing about capital gains is that taxes are paid. Capital gains tax ranges between 50 to 20% depending on the amount earned. They can go down to 0% as in real estate. In most instances, once you get capital gains from a real estate property and you reinvest back into the market, you may not have to pay any taxes at all. You can increase your net worth tax-free. Most of us know one or two ways to build income. However, knowing the kinds of different types of income and how they're made gives us a better opportunity to add more sources into our lives. Which source of income sounds best to you, and which one will you add next? Be sure to share your answers in the comments below. We love hearing from you. So don't forget to like this video and subscribe if you want more tips on mastering your money. Thanks for watching, and I'll see you in the next video.